JB here. Hope everyone's doing standing Friday, March 7th, 9 a.m. Really quick rant, talk about the market, some names I'm looking at, go from there. S&P futures were in the green for a flash here and have since kind of traded slightly in the red. We'll see what happens. But Monday and Friday have been historically not good performing days in 2025 outside of last Friday. So maybe we get a repeat of last Friday's reversal and into the green. So some things of note. So after the close yesterday, you had Broadcom report earnings, and you would think that would be maybe the catalyst that helps put a bid in some of the names. A huge beat and raise, but all the way up to two. I think he hit 210 in the premium, 205, and it's starting to melt a little here. So I think it's important here if it can hold its gains and maybe get back over 200. Otherwise, it seems like it's a sell the earnings environment recently, like the great earnings. Look at all these names: the Celsius, the SolarEdge, AppLovin, all these names that have just reversed great earnings. So I don't know. Hopefully, Broadcom's not another casualty of that. And then also after close yesterday, we had the executive order creating a crypto reserve, right, for the U.S. And I think there was a lot of folks, especially the folks who are bullish crypto, thought that maybe the U.S. was going to actually be buying those the coins and crypto into the reserve, and it turns out it's just creating that so that they can take assets that were seized in uh, criminal activity to start into that reserve. So I think just signing that in and itself is bullish, but I think there was more people were expecting more, and then you saw crypto taking on the chin, and it's since reverse course is kind of slightly in the green here this morning. So then this morning we had the jobs report, and I kept saying that I thought it was the possibility of it being a doozy, like maybe even a possible negative read on the GDP. I mean, not on the GDP, on the jobs report, and it came in slightly below estimates, but not by much. And then the unemployment rate ticked up from 4% to 4.1%. So almost like, um, I mean, great report, right? You would think with all the headlines of the government layoffs and all this stuff, you would think, oh my gosh, that number's not going to be a good number. And then now it's like maybe you want it to be not so good so that the Fed might be apt to cut rates, right? So odds of rate cuts downticked a little bit after the report. So we'll see what happens here. So the SPY gapped all the way up to 577, 578, and is giving it all back, hitting lows right here. So we'll see. I put it on a watch list. I'll make if we don't reverse here and hold green, that it's more than just the jobs report, right? I mean, it just feels like right now it's like things are uncertain. And until that changes, I don't think it matters what data point. Yesterday we had the GDP number that came out upward to from negative 2.8% to negative 2.4%. So I don't, so we'll see how this all plays out for me. And I keep saying I always trade, especially when I'm doing hedges on support resistance. So as we continue to break, if we continue to break areas of support, I'll look for more hedge positions, and I'll be very selective on spec positions, especially even on bounces too, just getting small positions, because small can become big in this environment, and big can become small in this environment. So that's kind of how I'm trading. But key areas to watch. So the Nasdaq hit its 200-day moving average yesterday. The S&P came close. So don't want to see that happen. But if it does, a nice historical. I think this was in Market Watch. The past, I think, 16 occurrences it's happened since the great financial crisis, since 2008, 2009. Once the S&P has broken a 200-day moving average, if you bought it the day of that break, a year later it's up 17% and has only read one time over that time frame, and that was back in 2022. So historically speaking, we break the S&P, it almost might be bullish, right? but there still might be drawdowns. So you see there's average drawdowns from where the break went through. But definitely something to pay attention to if we have continued weakness here today. But I keep saying 572.50, and I had that chart up yesterday. It seems like that's kind of like the bounce zone. So if we can find some support there, maybe that'll be a spot we can bounce off. We're actually at 572.50 here. And then underneath, so then you got to look at the 200-day moving average on the SPY is 569, and then you go back to October lows, 563. Those will be the two areas I'm watching. So that's that. Again, I don't have my bear suit on per se, but if we close under the 200-day moving average today, I'll be more worried that there might be further downside, maybe down to 540 or so on the SPY. All right, so that's that. It's overall market. So individual names, Caterpillar showing relative strength the last two sessions. Finally, those 350 calls I had were a little rough at the open and then back into the green towards the end of the day. If it rallies today, I could see it train over 350. So I'll be quick. If I can get a double out sometime before the noon hour and then hold the rest, I'll do that. Cover cost, ride the rest. But if the market finds the floor, I can see Caterpillar getting over 350 today. So that's kind of like the spec call position. Then you look on the flip side. I got those Goldman Spectacular puts on Wednesday, and then it reversed the lows all the way up to 593, and then yesterday opened at 586 and all the way down hit lows 566 and change before bouncing a little bit. Another name that looks like it has a date with its 200-day moving average down at 529. I don't know if it happens today, but if it can't find footing here today, I might look for some more spec puts to add to my 540s today, just because I think it's like a snowball, right? It's starting to gain momentum. Once that happens, I think it's like inevitable. So that's Goldman Spectacular. And then with the SPY breaking 575 yesterday, it's key spot for me that I would say I would add more put hedges. I was looking for some possible put hedges. Got strategy again. It has the tendency to have these moves on Friday as well. I mean, the last 5 Fridays, it's traded lower. So, and also on swings, especially end of the day. So don't be surprised if I add more spec puts. If it has weakness, it's another name it's volatile. I mean, it was having $10 swings on Wednesday and Thursday, $10 30-minute swings. So Friday the premiums will come out so that I can help. And then other names I'm looking, I keep looking at Ralph Lauren and Intuit, and Intuit gave back its upgrade gains yesterday, closing a red. Tough on the premiums, but some weekly strikes today might be a nice spec put play. And then if you look at our Ralph Lauren, just a bloodbath. And there was some huge put volume yesterday on March 230s. So I might get some strikes there. And that's it, folks. I'll try and be on the audio in the afternoon if things get crazy. Let's have a great day. I'll be back rock and roll.